So, Alastair, what influence, and we've heard this now from a number of the biggest asset managers in the world, what influence will they have then on climate change and ESG issues?
Well, that's the key question. I mean, asset managers used to care mainly about the earnings of a company and ultimately their returns. But now they're having to take on this new role where they're not only caring about their financial returns, but they also have to think about a company's impact on the environment and on social issues. That's partly because they're being pressured from environmentalists, they're being pressured by society at large, but also by their largest shareholders and their investors who are asking them, what are you doing about climate? What are you doing when it comes to contributing to diversity and so on? And therefore, they are kind of almost feeling like they must do something about pushing companies to change, to make changes towards the transition towards a low-carbon economy, a more diversified workforce, and so on. Whether they can actually be successful or not is a big question because, frankly, they were set up to manage money and make returns, not necessarily be guardians and stewards of a better society. So lots of questions there.
Well, I suppose, yeah, it depends how sustainably out into the future you want to guarantee that society. Maybe that's one argument you hear from the sort of ESG community, Alastair, isn't it? What about the, this may be a way that active investors, I guess, can set themselves apart from passive investors, and that might be another thing that's going through their minds. But is this all something that we just throw out when times get tough? If we see the global economy really start to tank in the wake of black swan events such as coronavirus or other global events, are we going to stop talking about ESG all of a sudden? Because it was the talk of Davos.
Yes, it's very much a buzzword. It's very much a train that people are jumping on. And actually, I mean, the ideas of kind of social and responsible investing have been around for some time. The history suggests from the 1990s actually that when responsible investing really got going, actually when the push came to shove and the market tanked, people quickly got out of that investments. They saw that actually returns trumped morality or kind of ethics when it came down to it. And we'll see how it goes with ESG. ESG has been kind of mainstream for the last 5 years. So we've been in something of a bull market. We haven't seen a downturn. So let's really see how strongly asset managers hold to these beliefs when the pressure's on.
You've just written a piece on gender diversity within ESG, within finance. Are firms practicing what they preach in that subsector?
Well, yes and no. So that piece is suggesting or using market data to show that ESG or social responsible investing is one of those rare corners of finance where the gender balance is almost equal. There are still more men than women, but in the top levels we have data suggesting that there's 44% of the top roles, head of ESG, head of social or responsible investing, are women at the largest asset managers. And that's quite unusual in finance, but that's not really necessarily come because these companies have been promoting those women. It's just because in the past that used to be something of a backwater. It was something of an ignored sector. But now, given all this push about climate change and how companies must be seen to be doing something, a number of women who've held these roles have been elevated to senior positions, which is great for gender diversity in Wall Street, but is not necessarily a product of kind of actively pushing diversity.